Morning, everybody. It's Wednesday, October 17th, and Dr. K and I are coming at you from, I'm in beautiful Playa del Rey, California, where we're actually getting some nice, crisp autumn weather. A little mid-70s here. How about in London, Dr. K? I know it's a little bit cold out there, so but you like that, don't you?
Well, in central London, it's always about 10 degrees Celsius warmer. It's a dramatic difference, and so I don't really feel the winter cold. And I suppose, the moment I set foot 30 minutes outside of central London, it drops like a stone. So yeah, I mean, it's funny. Today, I was out in short sleeves, and it was fine. Yet outside of London, it's cold.
Great, that's great. Anyways, what we're here to talk about today is the market, as always, and we thought we'd come in on today, which is, as you can see on the NASDAQ chart here, third day of a rally that has taken you above the 50-day moving average, and right into this area here, which is around, let's see, what are we looking at here, around 3,100 on the NASDAQ. So you're right up into this area. This might be a potential area of overhead resistance. At the same time, though, objectively, you can't really judge anything here until you see something happen in terms of a rollover and some volume pickup on the downside. And with the leadership being a bit spotty, that seems to be what I'm looking for. So although tomorrow you could get a follow-through day, a fourth day follow-through, and the market could be off and running again, that's a possibility. So we have to remain open to that. But right now I'm kind of just vigilant here, watching the market push higher this morning and the last couple days, and just waiting and seeing where we can come in on the short side, if at all. Because what we've already seen on a couple of short situations that we played with, Intuitive Surgical, of course, was pretty simple short. Here, all you had to do is use the 50-day moving average as your stop, and once you got above that on Monday, that was a cover. I had a short position here. I just covered it, so it's a small loss, couple 3%, nothing really major, but you definitely want to stick to your stops and get out of the way. The other one that looked like it might roll over here was Baidu, which had this gap down on heavy volume, and it's rallied right back up and filled the gap. Now it's looking like it's trying to make a run for the 50-day, but that's not really clear. Earnings come out next week, but you can see that you're not getting a lot of traction. You get a couple down about a week or so ago on shorts, and I was shorting off the peak, of course, and making some money on stocks like Priceline off the 641 level, which we had talked about a couple of weeks ago, and even shorting Apple on the quick break of the 660 level. I think is where we hit it, and then covered right on top of the prior base, which is around 624. So those are really just tactical shorts, and we'll play those and take some quick money out of them as we're trying to see what sort of position the market moves into in terms of a sustainable trend. Now, it may not even have any kind of trend for a period of time from here as we move into the election. I don't know who won the debate. I don't even know if such debates are even winnable, because it seems like everybody's just repeating the same stuff, and Obama goes on with this stuff about millionaires and billionaires, and Romney has his 5-point plan, and you don't really know who's really winning or if that makes any difference. So, Dr. K, what's your take on the market? What are you looking at right now in terms of either any expectations or things to be watching for?
Well, as always, I'm looking at the action of leaders and looking at the major indices, what they're doing. It was good yesterday. We had increasing volume on both major indices that were up on the day, but really it's anyone's guess where the market's going to retest lows and move a little lower, or resume its uptrend. So that's why the model's gone to a neutral, because when there's really no odds in either direction, it's better for the models just to stay in cash.
Yeah, and it almost seems like true to form, at least in 2012, the model went to a neutral signal right here, right off the support area here, around 3040 on the NASDAQ, and then on the S&P, it was actually sitting right at the 50-day moving average when that signal hit. Now, do you take into account the position of the indexes when you get a signal like that, if they're occurring right at a logical area of support?
Well, if there's enough support, then it does weigh in, but there's a lot of cases where the support really means nothing and the market breaks right through the support. And had the model not switched to, say, cash or a sell signal, it would have missed out on downside profits. This has happened a number of times, so you have to be pretty careful about assuming that support areas are going to all work out. If you see enough selling pressure on the leading stocks rather, then you're going to the odds are that the market is not going to behave properly, and it's probably going to break through those support areas.
But in this case, that didn't happen. So we have a 3-day rally. You can actually see the S&P almost pushing up towards its highs. So anyways, we're on a neutral signal, so I think that means you can just kind of hang back and wait to see what happens. Now, there have been some things occurring in terms of specific stocks. I do want to go over Intuitive Surgical. I think this is pretty interesting because I actually bought stock off the 200-day moving average this morning, and it's running. And yesterday was not quite a pocket pivot, I guess, but I don't know if you'd call it that because a lot of the volume came in after hours. Well, I'm using the wrong chart here. There we go. Yeah, yesterday was a pocket pivot, so a lot of the volume occurred after hours, but you did get this pocket pivot type move up to about 534, I think was a peak yesterday. Now you're moving higher. So this also shows how things can change very quickly after earnings, so you really have to go with the flow. I don't think you can really try and force anything here. If you are trying to short something like this, you do stick to your stops. And if you're going to hold something into earnings thinking that you're going to get a pop one way or another, I guess you could have been successful if you had shorted Intuitive Surgical at the close yesterday and then covered somewhere around the 500 level when the stock reopened after earnings, because it got shellacked pretty well. But at this point, it almost looks like it just wants to go higher, and you may have a lot of shorts in here that are getting squeezed. But a decent trade off the 200-day on the basis of a pocket pivot, and so far that's working. But that's a bottom fishing pocket pivot, so it's a risky trade, but something that I like to do, and it paid off this morning. So that's really the main thing I'm looking at, and other positions I've been looking at here is still the possibility of shorting Baidu here, although it does sort of look like it wants to go higher. But notice the market seems to be doing okay, and it's hanging out. So with earnings coming out next week, this remains to be seen. So I don't think that you can assume that the short side here is all that exciting right now. I know we're getting some questions, people asking about Bed Bath & Beyond. You had a breakout to the downside on volume, but notice this reversal where you have volume picking up. Now you're just gapping up into this area. You could try and short it in here, I suppose, if you think the market's going to roll over. That seems to be a plausible place to short the stock in low risk area with the high of 62.31 as your stop, which is not quite a buck higher from where you're at, so about 2% max, less than that on your stop. So that's pretty tight if you wanted to try that. So MNST, I'm not so sure about Monster because it is above the 50-day moving average. I wouldn't short it up here necessarily because you did get this slight little pocket pivot type move right here, and it's holding above the 50-day. The other thing is if you're looking at on a weekly chart, this is a weekly chart here of Monster, this could be the spot here, but I think they come out with earnings pretty soon. Dr. K, do they come out with earnings in the next few days? Well, in a couple of weeks, early November, so I guess it may just hang out until then. So, not much going on there in terms of a clear signal that you would want to short, but it does look like it's vulnerable to further downside. So, you could come after it here, but unless it breaks before earnings, you're left with that problem of whether you're going to hold a position into earnings or not. And my view is I've been able to make steady money since the middle of August and playing more of a short-term, taking more of a short-term posture in terms of taking profits, 10, 15, 20% profits on the upside, hitting things on the short side and coming in quickly and then leaving after 2 or 3 days, and trying to anticipate some inflection points. It's always easier said than done, I can tell you that much. But I've been able to make steady progress, so I don't feel forced to have to do anything right here. If you lost some money off the peak sitting too long in long positions and you got kicked around a little bit, don't allow your anxiousness to make it back right away to cause you to force things. You might want to lay back here and see how things are going. I'll test a couple of positions. If I can get something going on the upside, it can work like Intuitive Surgical today. And yesterday, before the opening, we talked about Coors as being on the top of our buy watch list, and that turned out to be prescient in the fact that yesterday you saw a pocket pivot in Coors. But what we're looking at here, and I think if you have a weekly chart available, it's pretty simple. you have a lot of tight closes. The 10-week moving average is caught up to the stock and is basically, holding very tight. So it looks to me like even in a correction, market's correcting, the stock is holding in very tight. And even after they've dumped 23 million shares onto the stock, it doesn't seem to be weighing it down. Now, I remember last week I was talking about I was testing it on the short side and hitting it, and it would come in a little bit, and I was making a little bit of money each time. But I noticed that it never really wanted to break down. It seemed to find support somewhere around the 52 area, and you would feel those bids coming in, and it seemed pretty strong. So by Monday morning, I just turned around, or actually yesterday morning, I just turned around and go long the stock here. But now you get a pocket pivot, and to me, this looks fairly extended, and so you do see the stock coming in. It could pull in further, but my view would be to try and buy the tightness, and then when you get this move that now is obvious to everybody, I sell into it. So I don't buy the pocket pivot per se because we didn't see the pocket pivot volume until the end of the day yesterday. And my view is at that point it's up. It's pretty obvious you're up 6% or something like that on the stock. You sell into it and take profits. In the short term, I can sit around and see what happens after that. And that's really been kind of the approach that I've been taking without getting too carried away one way or another, because there really isn't a sustainable trend. On the other hand, that's a strong sign for Coors to get that kind of a move, a pocket pivot like that. So that is initially a sign of strength. So it definitely remains on that buy watch list for now. But right now it's not clear whether you're going to be wanting to be long stocks for a period of time here. So things are still kind of working themselves out, and I think that's really how you want to remain. I'm going to go through some questions real quick. Well, you know what? Let me just kind of round out what we're looking at in the market. Regeneron, this is another stock. I bought some in here. It's running up. It's very V-shaped. So again, sell into this move. Nice 3-day pop. Sell into it. Onyx Pharmaceuticals. This area has been pretty strong. Another one moving up. Now this has held the 10 days, so I tend to like this better. I think if you're long this, you just want to hang out. It's acting pretty well. I also noticed Arena Pharmaceuticals starting to move today. It had a little pocket pivot right back in here somewhere, and it's trying to come and round out this base here. Stock's starting to move. I have to admit to buying some of this the other day and then just blowing it out right away, and of course that always ensures that it will go higher the next day, which it has. And you can see that on the weekly chart, actually not a bad looking pattern. So it's rounding out, hanging out in here pretty tight, and starting to turn around. They make obesity drug, and that's really the big thing here. So silver and gold. I've been talking about how as far as I'm concerned, for my money, once these things ran up like this, I just back away and wait to come back in on a pullback. Now, notice that the 50-day moving average has not yet caught up to, say, silver or the GLD on the daily. They're still well above those. But if you look at the 10-week lines, you can see on the GLD on the weekly chart, it did hit the 10-week line, and SLB is trading right around the 10-week line and trying to find support at it. Now, I don't know, Dr. K, what would you do here? Would you be waiting for these to come down to the 50-day before you're going to move into them?
Well, that would be quite ideal. So that is one of the things I'm doing. But on the other hand, if we start to see increasing volume on GLD and SLV, then I'm not going to wait around. I'm probably going to initiate a position.
You're going to initiate a position?
Well, add to or initiate depending on the situation of the person.
Okay. So far, though, what we're seeing here is just a pick volume and a couple of gaps down, which is not unusual for the metals to gap either way, as you can see. I'm just hanging out here. I'm just waiting to see what happens. No rush. I think one of the things that people might consider is that if Romney wins the election, he has talked about firing Bernanke or letting him go at the end of his term and ending QE, and that could have a negative effect on the precious metals. But longer term, fiat currencies are still in trouble, and so I think the longer term story is still intact. But in the short term, you could see a correction. Maybe that is what you're seeing now, and this may hang out for a period of time as the market figures out what it's doing. So. And that's basically our view there. But if you bought in here on these pocket pivots, you're still way up on your position. Being uber aggressive the way I am, you can start to see that this thing's going to take some time, and you can wait for some kind of significant buy signal to occur before coming out. And you can even see here. Notice how this V-shaped sort of pattern doesn't really pan out; it rolls over. So, and you got it still looks like the 50-day is within range, but that's not very far. That's only about 60 cents or so away from where the SLB is trading now. And the GLD, by the same token, is another what, $3, about $3.30 above its 50-day moving average, which really isn't very much, a little over 1% in the grand scheme of things. So when Dr. K says you can look to be buying in here, you're within range. So if you want to try it, you can, using a violation of the 50-day moving average as your ultimate selling guide. So anyways, and with the metals acting pretty well and holding up, I'm looking at some of these. Silver Wheaton, I think, is interesting because it's held up better than the metals. And if you look at a weekly chart, it's forming a nice base. This is a very deep cup, though, but not really out of control. But it's very deep, and so I would think this thing may need to go sideways longer. But it's interesting that these stocks, there's also, I believe, gold, Randgold Resources, are holding in tight and actually acting better than the metals. So it almost seems like you could do as well playing these in terms of trying to play the move in metals. So anyways. People asking about Priceline. I'm short the stock and shorting it up into the 50-day moving average. So today you're sitting around 60. What do we have right now? 602. So it's holding the 50-day. So yeah, that's where I'll come in and short it. But my stop is pretty quick. 611 probably at the most. And at this point, I'd want to see it start to roll over. Now we got earnings coming out in Priceline, I believe, first week of November, and sometime around then. And so, again, it brings in the question: do you want to be short a Priceline into earnings, or do you just want to kind of hang back? A lot of times, if a stock blows apart after earnings, it'll continue lower. I mean, iSurge, of course, today is disproving that notion because anything can happen. But when you look at some of those old models of Head and Shoulders patterns that break down, usually the breakdown occurs on some fundamental announcement. So, so that's really the problem here. I'm almost tempted just to kind of see if this doesn't give me some sort of a break in the next couple 3 days, then I may just go away because I don't think I want to hold anything going into earnings because I think it's just a crapshoot. So some other stocks also like LinkedIn. You notice how I got all these lovely lines being drawn in here. Let's see if I can get rid of them. But you basically can see here on LinkedIn, it's just coming down to the top of the breakout and right into this level at about 110. So it's holding. Now, Dr. K, do you call that a 50-day moving average violation?
Yes, because it just has to move below the low of the close.
Okay, and so
you would be selling this intraday.
You
wouldn't wait around. In other words, you would be selling it intraday. Because I've seen too many cases where it breaks below that low, and then sometimes it just gets ripped apart. And if you're sitting there, this is why sell stops are very important. In other words, if you couldn't watch the market that day, you would put in a sell stop just below the low of that day. It closed below the 50-day. Then you're safe. In the event. Yeah.
A little lower. Okay. I noticed the low here is 108.50. It's trying to bounce back up to the 50-day moving average, but I think it's interesting that it is violating the 50-day, but you're right on top of this area, and so I might approach it differently in terms of looking at it as possibly a buy here, because I noticed recently a lot of so-called 50-day moving average violations don't really the stock will flip out and then turn around and go higher, especially if you're right on top of a prior base, and so that's something to keep an eye on here, I think. But I'm just keeping an eye on it. I'm not going to make any commitments here. Apple's done the same thing, coming down to the top of its base after a 50-day moving average violation. But do you buy the stock there? I guess you could.
The problem with the top of the base analysis, I've seen so many cases where the top of the base is a little nebulous, and the stock literally whipsaw down through into the base by like 6 or 7%, especially if it's a more volatile name, and that's just too much risk to put on when you could have sold it at say a 1% loss. Yeah.
Right. Yeah, you're right, and it could test the 200-day moving average. So far, it's been holding on. Yeah, I know some guys like to come in and buy calls, and one fellow I know, he was buying a 610 call and also buying a 620 put. So I guess he's trying to hedge himself there. Basically going long the stock, I suppose, and and looking for some coverage if the stock does break below 620 into the 200-day moving average. But to me, that's just a trade, and I think that's really what you're looking at a lot of short-term trades in this market. So, anyways, is DHI a viable gap up? I saw that today. There's also Lennar is gapping up. I tend to like Lennar better. It's going to new highs. But most of the building stocks are up today on the housing data. I think you had increased housing starts and increased building permits above what people were expecting. So,
yeah, and best in 4 years. So people are thinking it's going to be, there's recovery in the U.S. housing market.
Where do you see a low-risk entry point for iSurge based on your experience with positive earnings reversals? Well, as I pointed out earlier today, I just came in off the 200-day moving average, but that I'm going to sell this and take profits, on this move. I'm not going to sit around with it. So it's just a trade. I don't know if this thing's going higher or not. It could just be a one-day reaction. It looks pretty powerful, but the point to take it is right around the 200-day moving average. You can give it 1%, maybe below, but that's probably about it. But you're looking for it to come off. But it's also based on the intraday pattern as well. If I quickly go to a 5-minute chart, let's see, is that what this is here? Yeah, here's the move this morning on the opening, and then you had this pullback. And here, don't pay attention to any of these moving averages because they're for a daily chart. But interesting, it did go back to the 200 period moving average and the 10 period moving average right there. But the volume dried up, and you see a little bit of volume pick up right there. And this coincided with the 200-day on the daily chart. And so in my view, that was the low-risk pullback intraday to buy. And of course, the thing just shot out of there. So a little bit of luck, But in some environments, I'd rather be lucky than good. And it's definitely a case of that. So, a scalp on an otherwise blah Wednesday as the market tries to figure out what it's doing. So, but that's how I determine a low risk entry point on that. How do you characterize the trading in iSurge today from yesterday? Probably more volatile and crazy. Would Dr. K comment on the Coors pocket pivot in relation to the 10-day moving average yesterday? In other words, I think what the person is asking is, was it a bit extended? But I kind of look at it as a breakout from a range. Type of pocket pivot.
In relation to the pattern, it wasn't extended because the pattern was sideways, and so exactly it was a breakout from that sideways move. Therefore, the low of the day didn't have to start on the 10-day, and I wouldn't consider that extended at all.
Yeah. So, but we saw that one yesterday morning early. So the nice thing there was to just go long the stock in the morning, and I hope some of you who do look at our morning missives that we send out. And I do think that's a very significant value-added service we're sending to the subscribers. For a period of time, we sent it out to our general newsletter list, which is, I don't know, a few thousand people, for free. And what we've done now is we only send it out to the general list on Monday, but then we get into the more dirty details on Tuesday through Friday, and that's only for subscribers. So we're trying to come in with some of what we're looking at in the morning. Because when we get up, we start looking at what our plan will be for the day, and so trying to get some insight into that. Yesterday, we saw Coors sitting there, big and fat and big fat and plump fruit ready to fall off the tree there, and that's exactly what happened. Now look at it coming in 55.88. So in this market, strength does not necessarily beget strength. It's just a short-term jerk to the upside, and now it's coming in. But maybe the stock needs more time to set up in a base. Let's see. A possible M for murder pattern on the SPX. These last 2 days with the SPX going up, if the bulls can't break resistance, could we be in for a bearish turn in the market? Was the MDM signal to go to cash the aperitif before the main course of bearish delight? Well, I really like that person. We should hire them to write for us.
That was poetic.
Definitely. Bearish delight. Yeah, okay. I guess, I don't know. Was it the aperitif, or was it more like a pre-dinner martini? I don't know.
Well, like I said, it's really hard to know where the market's going to go up from here or down. That's why the model's in neutral territory right now, and that could switch today, tomorrow, depending on what happens. But what today could very well be an up day on lower volume, and then the market rolls over again. But who knows? Some of it's going to be earnings driven because we're in the middle of earnings season, and obviously some of it's going to be QE driven. So, the QE probably is my guess. If I were a betting person in this neutral situation, I would say overall the market's going to go higher, but we don't know if it's going to retest those lows and move lower in the meantime. So it's better just to stay in cash in relation to ETFs at this time.
Right, but yeah, well, I'm not sure about this M for murder. Is this the M here? This sort of thing here? Is this it?
Yeah, I think that's what they mean. It's traced out an M. Or W. I'd trace out a W, really.
Let's do some line. Yeah, it's more of a W for what? But I don't know. I guess this is more of a W pattern.
W for who knows.
But look how. But again, look at what's happening here. You're getting really choppy, and so that does present some problems. I think either way, whether you're trying to play the short side or the long side, you know, because you break to the downside, things look pretty ugly here, and now you're going to jag back to the upside. NASDAQ is a little weaker, so you know I think if I was going to go after either of the indexes, probably the NASDAQ's the weaker one. But who knows? Who knows what's going to happen? So someone's asking MLNX into earnings, so I wouldn't buy it, and I don't think I would really short it either. Stock's been, let's take a look at a weekly chart. It's holding pretty tight along these levels. I don't know if that means it's ready to blow to the downside, but I don't think you can really tell anything here, so I'm not really in the mood to go long or go short it. So any comments on coal, ACI, ANR? These aren't really showing up on our radar screens really at all, so we're not really looking at them. You know, there's some talk that if Romney's elected, you'll see oil and coal stocks benefit. And you know, that may be true, maybe it may not be true, you know. And so a lot of these patterns, when you look at them, you're just coming off the lows of these patterns. So I would look at them in terms of where they are, and I don't really see anything here unless you like to buy things off the bottom. So, you know, Walter Industries another one, and I don't see anything here. Do you, Dr. K?
Nope, not at all.
Somebody asked, would you buy it before the pocket pivot volume and 1% above the 10-day and sell once the volume takes place? I think they're referring to cores. I just buy it if it's tight. And see, the other thing is, and this is something I've tried to kind of convey to you guys, is that the way I trade, I need to feel things. And when I feel things, I can tell viscerally, and I don't know if it's consciously or subconsciously, but you can, if I'm going short cores at, say, 53.50, and it drops to 53 or 52, and I'm making a little bit of money, but that's all. And every time it comes down to 52 and dips below 52, I can see bids coming in, and being in a position and being short, I can kind of feel that. And once I realize, okay, this thing doesn't want to come down, I'm going to turn around and go long. That's the basis for my buying the stock, and the fact that it was very tight along here, along the 10-day moving average, and holding above the 50-day as the market was coming in. So I just went long it yesterday. I had no idea that there was going to be a pocket pivot. But I can tell you when I'm long stocks on any particular day and I'm getting a 5-6% move, I'm inclined to take it. And in this environment, that has worked pretty well because it has not been a very strong trending environment. So do you like jazz in here? It hasn't shown up anywhere in my radar screens. It's just been holding up in a flag. So, you know, I'd be waiting to see if there's some sort of a pocket pivot. Volume is drying up on the daily chart. You can see that. And so I'd just be waiting to see if you get some kind of a pocket pivot or a strong buy signal to come in on. So you can see LinkedIn is continuing to move higher, and it's now getting to the 50-day moving average, but there isn't much volume in there. So anyways, just following up on that real quick. OCN forming an HTF. Well, it isn't a high tide flag, but it's pretty extended at this point. So, you know, I don't know. This seems to be getting a little long in the tooth here. So, you know, but it's a high tide flag. So what does that mean? You know, mortgage your house and put everything into it? No. It means if you bought the position earlier, I guess it's acting okay, and you would stay with it. In this case, you can see that it has held the 10-day moving average for quite a long period of time. So you would simply use that now as your selling guide if you were long the stock. So pretty simple. Let's see, what else we got here? I want to get through as many questions as possible. Can you comment on PATK, Pat K? What is this? It's got to be a tiny little stock. Yeah, it trades a little over 100,000 shares a day. I don't know. This is one of those stocks that when I was a broker back at Payne Weber and Merrill Lynch, a broker could get on the phone and start calling his clients to buy some stock trading 100,000 shares a day. Before you know it, he's a third of the volume and the thing's running up $2. So this seems to be one of these types of stocks as far as I can tell. And so I don't play it because it's too thin. But it's an interesting pattern. I mean, it's a good little pattern. Earnings growth is 88%. It's in building. I guess mobile homes. Is that what these guys do? That's what it looks like.
Yeah.
Yeah, wall ceiling panels and vinyl cement siding for the manufactured homes and recreational vehicles. So, I guess if you bought somewhere in here, you're doing okay. But I don't really see any buy points down here. Do you, Dr. K? Or up here, rather.
I'm not liking it. Just a bit too thin for this environment.
Yeah, I mean, for us it's too thin, so it doesn't really get us excited. So, will you comment? Is it too thin? Too late to add to position? Well, there's no buy point. So remember, we're only going to add to a position if once you see a breakout or a pocket pivot coming up there. That's really where you're buying, and I guess that would be you follow the pivot move down in here. Right there off the 10-day, so you could have bought it there, and it never violated the 10-day if you're using it as your selling guide, short term. And it's run up, but straight down, straight up to new highs. Is it too late to buy it? Yeah, it's way too late to buy, and there's no signal here to be buying it. So, but when people see things going up, this greed takes over, and they're how do I get in? How do I get in? And at this point, really speaking, there really is no way to get in. So. But I know that feeling when you see something go up, and if you if you buy something and it starts to go up 10%, you didn't buy enough the first time around. So that's kind of the psychology there. RACs, excuse me. I don't know. It's holding the 10-day moving average. It violated it here, but the stock's kind of way up there, and I'm not a buyer. So if I owned it, I don't necessarily see a reason to be selling it just yet. What's your take here, Dr. K?
I'd be sitting. I mean, it's shown itself to be resilient in the face of a downtrending, briefly downtrending market. So it's doing everything it should. And I'd be just sitting and waiting. You could use the 10-day violation of the 10-day, which is not far from where it's trading right now.
Yeah. So I think that keeps you pretty tight. If you're at 67.36, you could even use, say, the fifth close down below this one even, and that still only takes it down about 5%. So it's really not. There's not a lot of risk in here if you're long and holding, and you have your guidelines for selling it. Somebody points out Allied Nevada. I know this one, and it's also holding up pretty well. So there are a number of gold stocks I notice, metal stocks too, that like the Silver Wheaton. I've been checking out AG lately. First Majestic Silver. I always love that name. And it's the same situation. A lot of these have these big up moves off the lows, and they're going sideways in these flag patterns. They could sit there for a while. So I think in the meantime, what you're doing is you can watch, and I've got all of these on my list: AG, ANB, GOLD, SLW. Those are my 4 favorites, I would say. And just put alerts on for pocket pivot moves. So in this case, if you're looking at let's go to ANB, just since that was the one that somebody mentioned. You have a pocket pivot here, but it doesn't get above the 10-day, so that doesn't work. You have a pocket pivot here off the 10-day, I believe, yes. This one is not a pocket pivot because it's not higher than this down volume down here, but this is a pocket pivot off the 10-day. Notice how it violates the 10-day pretty quickly, so it's a little choppy. And I guess you could come in here, you drop a couple of bucks, it's not the end of the world, so that could that could be a basis for buying it, but I haven't seen much of that in any of the other ones. SLW had a pocket pivot here, but that's sort of pooped out. But it's holding above the 10-day moving average, so I tend to like. They're all pretty much, they look the same. So I would say some of them, ANB is stronger, SLW looks stronger, GOLD looks stronger. Let's take a look at Newmont Mining. Similar sort of flag pattern, but they all look the same. So, and then there's nothing really conclusive here. Tredegar Industries is one that we get questions about. That's a stock. It's pretty choppy. It's a thinner stock. Trades a little over 400,000 shares a day. So, not one that we really like to play. But it's acted okay. It's very choppy and volatile. But it's holding the 10-day, And I think you look for a violation of what, the 10-day or the 50-day here, Dr. K?
This would be a violation of the 50 days since it violated the 10 just a few weeks ago.
Right here. Yeah. Please comment on WDAY. There's really nothing to comment on. It's been public for 4 days, so that's what it looks like on a weekly chart. I didn't even know this thing could have a weekly chart, but I guess you get some overlap 1 day from last week and then 3 days this week. It's an IPO, so you're just waiting to see where it forms to first base. But I'm not going to jump in and buy the stock right here.
Yeah. Also, it has no earnings yet. It's not going to be earning for any time soon.
Dr. K, can you comment on buying a pocket pivot on Coors when the MDM is not on a buy signal? I think I already covered that from my perspective, and my view was to sell into yesterday's move on the basis of, the market's not really in an uptrend, so that does figure into it, and also just the way things tend to act in this market. I'm watching price lines start to break the 600 level, so that looks good on the short side. But anyways, can you comment on that, Dr. K?
Yeah, we talked about it in the FAQs about when the MDMs, whether it's on a buy or a sell signal, if we point out a stock, that stock may suit your risk tolerance levels, and you might take a small position in it, even if the MDM's on a cash or sell signal. That's provided that stock has managed to buck the trend and is offering a very seductive pocket pivot or other buy point, because as we know, some stocks will buck a market downtrend. And the same applies in reverse. So essentially, it's just about putting your portfolio in context with what the market's doing, and then sizing your position accordingly.
Yeah. Someone asks, why sell Regeneron when it's executing an O'Neill-style high-volume moving average bounce to a new high? Mainly because, number one, you're not in a market uptrend, and number two, it's kind of a V-shaped move to me, and this stock does not generally just take off. The other thing is I'm always willing to buy something back if I sell it and it starts to show more strength, so I remain flexible that way. But I don't really get wedded to stocks in this environment, because all I've noticed is in most cases you get all long and excited, and 3 days later they've taken everything away from you by knocking the stocks back. So the biotech area has been very strong, but it's just one way of operating in this market on a short-term basis and taking nice profits when you have them, and not buying into extended situations. So mostly I'm looking to either lighten up or sell into extended situations, and that's just the nature of this environment, because it's been very choppy. It's not a trending environment. But yeah, usually when you see that sort of thing happen, it's breaking out to a high here, but it's a little bit V-shaped as I see it, and straight down and straight back up. So it's vulnerable to failing, and it may have to back down here. But I keep an eye on it and just see what happens. I don't need to. Let's just put it this way: there are sometimes in a market environment where I'd rather be in a stock or out of a stock wishing I was in, instead of in a stock wishing I was out. And so once you buy a stock and it gets a nice 3-day bounce and you have a decent profit in it, why not take it and put yourself in the position of being out and wishing you were in? If it's going up, you can always buy back in. So I don't really take this view that you need to buy and sit with things, especially in this environment. And I have to tell you that the results so far, in my own account, speak for themselves. And just being able to hammer out consistent gains week after week over the last several weeks, and being able to deal with a lot of the volatility. So, and a lot of this is due to the short-term model that we use as well. So, so the risk-reward has been very very favorable adopting that sort of style. So, but if you own it and you want to hold it, and you're not running a 150% position or something like that, and you have more like a 20% position, you bought it way back, on these pocket pivots down in here, then you can just sit if you want to. It's really a lot has to do with your own psychology. There's no absolutes in the market. I know people always want to hear about absolutes, but so much of trading is dependent on your own psychology, and once your own psychology becomes contaminated, or you try to suit your trading style to what somebody else expects you to do or thinks you should do, then you're screwed. And I just know that from my own experience, and so I just choose to do things my way. And you'll find as you are progress through your trading career that you begin to understand yourself go through a couple of crisis periods where you get kicked around, and I think that helps get you back on track and also let you know where your weaknesses are and what you need to guard against, and helps you improve your techniques based on your own psychology. Because I think your biggest enemy in trading is your own psychology. Someone's asking about lumber liquidators, and you got a 3-day bounce off the 50-day moving average. So that's really, since this blast here, that's really the first test of the 50-day. And you notice the second test, this doesn't look too bad, because what I like here is you do come down, you pick up some volume here, but notice you close mid-bar, and then the second test of the 50-day occurs on lighter volume. So that's actually pretty good, and it's in a 1, 2, 3, 4, 5 week base now. So we're sitting around here looking for a pocket pivot somewhere in here, or some kind of flag breakout, and I think it's just a matter of waiting around. I think the easy money for now was made in this thing, and it's going to have to base for a period of time. 3 days up, I'd be looking for a little pullback here, but that is a constructive bounce off the 50-day, 10-week moving average, which it has tended to hold all the way up. So, that's acting okay, building a nice little base. People ask about Regeneron, PCRX, Pacira Pharmaceuticals. I hate this stock because it starts to move and then it doesn't go anywhere, and it comes in and it's fairly volatile, and it's very thin, trades less than 300,000 shares a day, but it's holding the 50-day okay, so there's nothing really wrong with it from that perspective. Arena I already talked about. Have any natural gas plays popped up on your radar? No, not at all. Biogen. How about your radar, Duck? You got any natural gas plays?
Not at this time. No.
No. So how about some unnatural gas plays?
That's a different market altogether.
Yeah, saying the Mexican restaurants in London, I think. Biogen. I like Biogen because it looks like dog poop here, but see, it does get below here, the 50-day, but it doesn't really violate it. You do have a little tiny move below 3 days ago, but it comes right back on top of this base, and boom, it's back up here. So, it's just back into this mode of building a base. And it's not really tight right now, but it's just holding a base, and it has not violated the 50-day moving average yet. So if you're using that as a basis for selling the stock, it has not happened yet. So there's really nothing to do. ALXN, possible pocket pivot. Could you have a pocket pivot up here? And let's say if you did trade enough volume to do that, which would have to be higher than 1,372,000. It doesn't really look like it's headed for one this morning. So
yeah,
I don't even see really that I see it's extended from the 50-day, trying to come up to the 10-day. I don't know. What do you think, Dr. K?
Yeah, it's doubtful it's going to make enough volume for pocket pivot, and if it did, I'd have to look at it at that time to see where it's trading in its range and how the market's doing overall.
Yeah, I mean, if we do like it, you'll see us. You'll see us put out an alert on it. So here's a question for you, Dr. K. Are you still playing this market based upon your conviction that the market will always return to a trend, and therefore it's best to stay in the game and play pocket pivots so that you are early when the trend does begin? My experience playing this market, even with smaller positions, is to have my sell stops triggered after short profits disappear and to have my account trend lower.
Right. It depends on one's style. I mean, my style has been to make small adjustments based on the way the markets have been fairly trendless in the last 2 years, and so naturally, I'm not, I'm not looking for a long-term trend in this kind of environment, and therefore, you have to be nimble sometimes. And if you have profits in the stock, you might be better off taking them, as opposed to if we were in a year like 2003, where you get nice long trends and there's many leaders that are participating. This year, there's been the number of leaders participating has been incredibly scant. So, I would say, my style is to let winners run, but in this environment, my style is more short term, and that it's not my normal style. But while this kind of market continues, which is kind of a whipsaw sawtooth formation, I see it better to just take your profits when you have them. And of course, there's exceptions. I often will hold on to a stock, and it'll come right back in, and then I'll sell it, and I will not have made any money on it, and that's okay because that's more of my style. And every now and then, there's going to be a stock that does outperform the rest, regardless of the market direction. So I'm always keeping that in the back of my head, because the last cardinal sin for me is letting a stock go too early and then it goes up 50% or more on you, and that can happen even in a year like this year, except the odds are very low.
Facebook, someone's asking about. I'm not trying to bottom fish this because there are no buy signals off the bottom. You had some attempts at some pocket pivot type moves, but now the volume is pretty weak, and I don't really see anything shaping up for the stock. So my book, I don't play basically. Let's see here. Did Fossil have a pocket pivot yesterday? Well, if it did, I didn't see it. So. I mean, it's a bottom fishing type pocket pivot, but it's, I don't know. I don't really like this too much. You could call it a pocket pivot, but does that mean it's going to work in this position? I don't know. So this is a huge break, and I'm not really sure about this. I definitely wouldn't be messing with it. How about you, Dr. K?
I'm not interested in it whatsoever, just because of what
Too
it
low
did
in
prior.
the pattern. So yeah, that is true. It is too low in the pattern. Here's a question for you, Dr. K. If the MDM goes to a sell, would you prefer to short the Nasdaq over the S&P and Russell 2000?
On a sell signal, well, at this time, you want to short the index that's the weakest, and so you would not be shorting the S&P since that's showing a little more strength than the Nasdaq. Yeah. The Russell is the most volatile, and that seems to be the weakest overall this year. So I would be looking probably at the Russell 2000.
So the TWM, basically.
Yeah, IWM, TWM, RWM. Yeah.
Well, the IWM, you would short it, or?
Well, on a sell signal, you can buy the RWM because it's an inverse. Well, the idea is you want to buy the inverse on a sell signal.
Right. So TWM is 2 times, RWM is 1 times. Yes. Okay. PCYC on track for a pocket pivot. Unknown. It's trying to break out its little pattern. It looked okay. The day I was looking at it looked okay. So
it looks like I bet it'll get there. Actually, it's pretty good today, and it's coming out of a constructive formation. So yeah, that's a good. Our screens would normally pick this up. In fact, yeah, my intraday screen would pick this up once I run it again.
Hey, Dr. K, I noticed we just got a. Oh, look at this! We just got a file in. I'll show this to everybody, showing the cover of the new book. Can you guys see this? If you can see it, maybe. Let's see. I'm going to shift here. There you go. Can you see that now, Dr. K?
Yep. I saw that. Looks good.
You guys, that's the cover of Mechanical. I guess we're going to have to look at this and make sure it's okay, but that's what it looks like. A nice bright red book. Beautiful. Anyways, where were we? Yeah, so PCYC, I guess, could be on track for a
487,800.
Yeah, VMware is still in a short pattern. It's still weak, but I prefer to hit it off of here. Now I'd be looking for a rally, seeing what kind of rally you get into the 50-day. Other than that, it's not in a position to short. And that seems to be all the questions we have now. Anybody got any last-minute? Let's see. Wait a minute. Nope. Yep. That seems to be all. Anybody got any last-minute questions before we sign off? I probably want to cover a few things that we're seeing happen right now in real time before we sign off. Could members get a book with both your autographs? I don't see why. If you come to the Traders Expo in Las Vegas, in fact, I think it's about a month from now, almost exactly. We're presenting on November 16th, and anybody who brings any books will be happy to sign them. But the new book won't be coming out, I don't think. They're saying January 1st, but there is some talk that they'll have some copies available at the Traders Expo. We'll see. Expedia looks like a short to me. It's telling here, it almost looks like a late-stage failed breakout, and to me it looks like it's a short. So I'm not. Let's see if I'm using the wrong chart again too. Yeah, I mean, it's looking kind of funky here, so I'm not really all that excited about it as a long. So It did close below the 58, but it has not violated it, so keep an eye on that one. Your take on that, Dr. K?
Yeah, it had the little mini gap. That's nice to see, on good volume, and now it's right at the 50 days. So, and it's had a gap up in the prior earnings report. So, I mean, it looks overall constructive, but you definitely want to wait until it issues some sort of pocket pivot. And I don't like this kind of formation here, where it's you're wedging right into the 50 days. So, this is not the time or place.
Yeah, it doesn't look very good here. So. You have mentioned that you hate PCRX. You've traded this in the past. Yeah, I tried it with a few shares, but it never really works. But it's just a general rule. It's too small. But I might try something out. It's just not a general rule. See, but again, when you ask this type of question, someone's asking. My question is that if its average daily volume is under 300,000, I thought you don't trade these low volume stocks. I don't operate in a concrete world, where everything is black and white all the time. So I might come in and try a position, but I've never really played anything big in PCRX. It's just too thin. So I can buy a few shares, a couple thousand shares, but it's really nothing, and hope that the stock's gonna, pop 20 points on some FDA approval or something, and that's really all you're left with, in my view. Because it's hard to get big something like that when it trades 300,000. So, but again, see, what your thing is, you've heard me say that I have a rule about not buying stocks that are thin, and the simple reason why is I need to buy in size. Okay, I don't have a $10,000 account. I can't. I don't just buy 100 shares. I need to buy 10, 20, 30,000 shares or more. And I don't want to be 10 or 15 or 20% of the average daily volume in a stock like that. So that's really where that comes from. Does that mean that I couldn't buy 1,000 shares of it just for fun? No. So, don't interpret everything as like a rule that's like a wall where you wall yourself in. You have general guidelines, but it doesn't mean that one couldn't take a small position in a thinner stock. And I pointed that out, that if you have a small account, you can look at stocks that are thinner that I maybe normally wouldn't trade if they're constructive, and you could try playing them. But the danger is, once you are big in a stock and you got, say, 40 or 50,000 shares of PCRX, and let's just look at this thing, and this thing starts coming down. So I don't want to be long this thing. I don't want to be long 50,000 shares of this stock if it starts coming down, because you ain't getting out, and that's really why. So, anyways. So don't take everything I say as like some major hard and fast rule, and that if I was once owning PCRX, it necessarily means that I had a huge position in it. If I was going to, in any case, if I ever did own a really thin stock, you can only take a small position. Anything else is just way too dangerous. So, anyways. All right, any more questions? Let's see, what are we looking at here? Look at my exciting buy list this morning. And some of the stocks moving are Arena, obviously. That one looks pretty good. Regeneron is still hanging on. PCYC looking like the pocket pivot. This one also, Fortune Brands, related to the housing area. Facebook trying to come up today, but I don't really think too much of that. I like the builders here on this gap up. That looks pretty good. Seattle Genetics, another one. I hate the stock too, because it looks like it's blown apart. It's violated the 50-day moving average, and then boom, right back above. So it's a little bit of a funky situation. Notice Wells Fargo is moving up today, but only up to the 50-day. Financials have been weak. I don't think that's a good sign. First American Financial has been a smaller financial, just keeps running. Ellie, I know, is one that people talk about or ask about all the time. It's holding the 50-day moving average, has not violated it. And on the weekly chart, it's a nice, tight little base, so it may be setting to go higher. You'd need to see some kind of a buy point. Lumber Liquidators are already covered, and it's forming a nice base. And you see a number of these in this area. You might look at mortgage, home builders, mortgage stocks, home retail stocks, home building retail stocks like Home Depot or Lumber Liquidators, for example. Those are looking decent. Eagle Materials is another one that looks very interesting. It's been holding up. It's a little volatile, but that's another one that plays well in the space. You can actually see as I go through here that some of these stocks are related. I don't know what Valero's doing there. It's a dog. American Eagle acting okay. So you can see some stocks, NSM pulling back down, probably needs to build a base. It's had a big run. It's never really built any kind of a significant base. Probably needs to. Maybe Ellie will be the one to keep an eye on, as it seems to be in a better position, this sort of ladle and handle situation here. So United Therapeutics is the name I've been keeping an eye on, just so you guys know. It's building a base, but it's kind of been funky, never really anything major. Dillard's another stock. We've talked about this, but it's really kind of neither here nor there. I do notice this morning that this catamaran is acting okay and seems to be holding up pretty well in a cup with handle. It might need to go sideways for a little bit. That's another one that's on my list here. I'm going to go through Equix here. It's violated the 50-day moving average. We're not playing there. Simon Property Group, these REITs were doing pretty well for a while. Now they've broken down. This doesn't look too good. And you've seen that in concert with the financials breaking down. 3D Systems is one that everybody has loved before, but we never really cared for it. Now it's breaking down and violated the 50-day. Now it's back above and needs to build a base. What else here? Triple D. Oh, we just talked about that. Oh, CRM. This is interesting because you're in a big cup and it's holding. It's acting better than VMware and F5, which I consider to be the other big stock, cloud stocks out there. And it is closing tight along this level, about 153, and holding above the 10-week moving average. Everybody in the world is short this stock, and so you have to wonder whether this thing's going to go higher. But they announce earnings pretty soon, I think. I think it's in about a month. So it may not be any movement until then. But for now, it's just kind of hanging out and building a base, so not too bad. NetSuite is one that everybody always asks about. It's holding the 50-day moving average. Tends to be a squirrely stock, but as long as it's holding the 50-day, it's probably still okay. So Monsanto, some of the ags have been hanging in. SolarWinds is one that's now violated 50-day moving average, so I don't like it. I haven't liked it for a while since this break. Kind of ugly. We notice Coors is trying to hold 56 level. That looks pretty good. It might be viable on this pullback. So if you missed yesterday on the pocket pivot. And I think if you did buy it, let's say, Dr. K, if you bought this pocket pivot, what would you be using as a quick selling guide?
I would be looking at the 50-day probably because it's so close to the 10-day right now. But of course, if it goes higher from here, then I might switch to the 10-day. It all depends. I'd like to use the 7-week rule, but of course that's also predicated on market conditions.
Yeah, I mean the problem with this is that you're pretty extended from the 50 days, so it's really not that tight of a stop. You're looking at probably 8% at least to the downside there on a violation. So what I would do myself, the way I might handle this is if I came in on this just to keep things pretty tight, is that number one, if I came in today, I probably would use the low of today as a quick guide for myself, because if I do come in on this, I'm going to come in heavy. Otherwise, I might be looking at the top of this range as something it should hold on top of, and that would be constructive, and that's around 54, 54 and change. So that might be one way to handle it. But ultimately, as Dr. K says, the 50-day moving average is your ultimate selling guide, and you want to operate on that basis. Otherwise, you don't want to allow yourself to get into too much trouble.
Also, if it came in so fast that it would come back into the base, that would mean today or tomorrow, meaning the 50-day doesn't really have a chance to catch up. And that means if it basically goes below 54 from here in a hurry on volume, that might be a warning sign. So you might want to sell it. And that might be predicated on a weak market. And so I might be cutting my position in half or selling the whole thing if it reacted that way. On the other hand, if the 50-day can catch up and then the stock kind of goes sideways or meanders around for the next few days, then you're more comfortable using something like the 50-day.
Yeah, so, and Coors is kind of one stock we're focused on right now, so it's interesting strength in this market. We'll see if it carries through. But, selling yesterday into that move, I feel it's kind of smart because pulling back in here, I can figure out what I want to do now. Others might handle it differently. But anyways, that's pretty much all we've got. You're in sort of, no man's land right now. You don't have a pocket, not a pocket pivot, a follow-through day in the indexes. which I guess is their own sort of pocket pivot. But that's what you'd be looking for in terms of a general buy signal for the market. Now, Dr. K, if we get a follow-through day tomorrow, will the market direction model go back to a buy?
It most likely would, yes. But of course, I have to see how the leaders are holding up as well. But it's a high probability that it would trigger a buy signal.
Yeah, and then it would become an issue of what to be buying. And we know, of course, we like and a few other stocks that we've discussed in this webinar. So hopefully that's helpful in terms of helping you guys build a short watch list right now of stocks that we're keeping an eye on as well and that have acted okay. So I did want to go through my list of stocks here that I keep up here. But this arena is really starting to move here. $10. I'm wondering what's going on. Is there some news on it this morning? I'll have to check up on that. But that's kind of an interesting move. In any case, that's all we've got for now, you guys. If you have any further questions, you know where to send them. And we'll catch you next time, all right? Take care.
So long, everyone.